So can we start, sir?
Yeah, sure. Go ahead.
Okay. So, dear participants, welcome to Professor Kapil Arora. He is professor at Alliance School of Business, and he is also the chair at Finance in the same university. He is the alumnus of NIT Surat and IIM Ahmedabad. He did his MBA in Finance and a PhD from Veer Narmada South Gujarat University from Surat, and he did PGDCA from Aligappa University, and he has total around 25 years of experience in teaching and research experience, and he published around 150 plus publications, and he specialized in the cases writing. So you can learn from him how to write the case on finance and something like that. So he presented paper in AUD Dubai and NTU Singapore also. Total 6 students has been completed his doctorate degree under his supervision, and he also provide the consulting services at L&T and Micro Inks, UPL, JK Tires, etc. And he awarded 3 very renowned award from like Bharat Shiksha Ratna from GSHEG New Delhi, Special Educator Award at Aston Media Private Limited Singapore, and Best Academician of the Year Award from CSERD Dehradun. He also associated with IGNU and ICAI New Delhi. So with this, we welcome Professor Kapil Arora to for this session, sir. Over to you, sir.
Yeah, thank you, Dr. Naveen. You can hear me?
Yes, sir, I can.
Okay, then I believe other participants can also hear me. So just one or two corrections here and there. I'm now not the area chair currently.
Okay.
We have a rotation policy. So like from February, my colleague became the area chair, and I am now only the professor as such. So maybe gives me more independence from administrative work and more, concentrate on my research work.
Right.
Secondly, that number of awards have now become 5. So 2
Okay.
more awards were received last year and this year in January again. So
Great.
small minor changes here and there. And yeah, always love to interact with faculty members. And you added one responsibility to me, case writing. So anyway, I'm here right now as part of this FDP to talk on the FinTech part. So just before I start, Naveen sir, can you just update me like the profile of the participants of this FDP?
Yes, we have around faculties from 40 different colleges from Gujarat, and few research scholar also, but majority of them are faculty members, and they belong to management and computer science area. Again, the majority of belong to management area.
Okay, so from the state of Gujarat only, huh?
Yes, sir.
Okay. So nice. Actually, I was there 18 years in Gujarat, and then I started moving out of Gujarat. Actually, moving in other states like MP, Rajasthan, and now Karnataka. So yeah, Alliance University, to which currently I am a member, faculty member, is currently the top third institute in South India actually, after IIM Bangalore and Manipal Institute. And if you look at NIF ranking, we were 39th ranking in management. So just a brief profile, and coming to Bangalore, I have been happy to associate with Alliance. So welcome to all the participants of this FDP. Now, see, I had just seen few glimpses as Naveen sir allowed me into the FDP by other participants. Few, sessions I had seen were technical sessions, and the previous session I could just check out Professor Somshekhar from Bangalore itself was talking in terms of the regression and the analysis for which you had been going into a lot of technicalities. So my presentation, which now I'll be starting sharing with you, is more towards first, creating the foundation of fintech. Of course, I see that the earlier sessions, a lot of people would have touched upon fintech. What is fintech? And the other day I was looking at Pradhan sir's presentation. In fact, Pradhan and myself are there in Vapi, Raffle College actually together. And now Pradhan is in Kharagpur and I'm here in Bangalore. So I was just looking at his sessions and I could understand the way he would have taken the session. And he talked about financial inclusion, if I'm not wrong, right? So
Yes, sir. Yes.
yeah, so from my aspect, like what I'm going to touch upon is how, just starting with the basics of fintech and then moving into how fintech is going to create disruptions in the financial services. I do hope tomorrow's session, the first session, which is on the fintech in banking, actually would be more in-depth kind of thing. So without wasting time, let me start sharing my slide with you. I think, yeah, just a moment, please. So Naveen sir, you can just confirm to me that the slide is visible to you. Oh, you are on mute, I think.
Sorry, it is visible, sir.
Okay, that's great. That's great. So once again, welcome to all the participants for this particular session. And what I'm going to talk about is a basic introduction towards fintech first. Of course, as I have already said that you would have been exposed to a lot of fintech, startup culture and definitions as such. So how I look at it and how I look at the disruptions that are going to be caused by fintech into the financial services sector or industry because of the emergence of this is the subject matter of this presentation. Let me start with this. Most of the faculties in management would be aware of this term, and this is something which has been there as the lingo that we use in management. So to start with VUCA, of course, this is something again people would have been very much familiar in terms of its the detailed nomenclature, which is volatility, uncertainty, complexity, ambiguity. So see, since I'm also from the finance area, we go back in 2008 when we had that big crisis, the worldwide global financial crisis happening. And since that led to a sort of a recession, this terminology was coined by the US Army War College. And you know that a lot of leading personalities in management, even the leadership teams at different universities, colleges, they tend to use this VUCA to describe the environment that we have around us. And yeah, nobody would have predicted this war happening just recently. So looking back, subsequently this VUCA 1.0 evolved into VUCA 2.0, and the 2.0 part of VUCA actually addressed this VUCA itself, right? So VUCA was to describe the environment around us. VUCA 2.0 addressed the leadership skills which were required to address the VUCA environment around us. So if you look in terms of the leadership, the VUCA 2.0 said that we need leaders who have vision. They can look into the future and they can understand that what kind of changing environment is going to be there, who have an understanding of the businesses. They can understand what is the role of HR, what is role of finance, what is role of marketing operations. They can understand that okay, based on these roles, how can we handle such kind of VUCA environment, or what kind of skills are required to handle that. And yeah, this century is of networking, this century is of people. So looking to the human side of the business, we also need to have leadership which has got compassion, which can address the needs and requirements of the individuals who man our companies, who man our colleges, universities. And also we need to have agility. We keep on hearing about agile technology. I think few of the computer people would be having a better understanding of agile technologies than me. But then I look at it in terms of the speed of responding to what is happening around us. So if there is a VUCA environment, we should be able to respond to it with the fastest possible response as there, right? This VUCA 2.0, as you can see, was actually coined by Bill George in 2017. He wrote an article on VUCA 2.0, which appeared in the HBS Working Knowledge and the Leadership Strategy articles. So this VUCA 2.0 was something which addressed this VUCA environment, And just like FinTech has evolved from FinTech 1, 2, 3, 3.5, let's see if there's another VUCA 3.0 which can address some other side of this VUCA. Moving ahead, coming to the topic at hand. So first, let me take up this definition of FinTech. See, I had seen some of the other resource person also talking in terms of the definition part of FinTech, but this is one definition that I really like very well because I have been into FinTech. In fact, we are running few courses on FinTech in our MBA curriculum. We have already introduced certain advanced courses at Alliance University School of Business. And for this, I was looking for some kind of definition of FinTech, and I came across this definition given by Sumit Chakraborty. He is basically a IMC alumni, I am Calcutta alumni, and he runs a business analytics lab in Kolkata. What definition he gave, I really like this definition, and let's just have a look at this definition. So what he said that fintech is a set of financial technologies, right? So first he's talking in terms of it being a set of financial technologies. What kind of technology? So you have got ICT, information and communication technology. You got cloud computing. You got internet. You got mobile computing. All this, mobiles nowadays are very well used for this fintech purpose. Then, in addition to these financial technologies coming together of different tools, platforms, ecosystems, that would make the financial services. Now, what kind of financial services would be, getting benefited out of fintech? So you have banking, you have payment processing, you have funding, lending, investing, trading, currencies. Of course, you would have touched upon cryptocurrencies, right? And all these financial services would actually gain out of the coming of these financial technologies together and making these financial products more accessible, efficient, and affordable. And that is, of course, what Pradhan was talking about in terms of the financial inclusion aspect, right? So we can see, everybody now has got mobiles in our hand, and the very latest news which came, I think yesterday the news was there that even the normal that the keyboard phones, the feature phones will also have the possibility of transferring funds without even having an internet or any kind of other possibilities. So see where we are moving ahead in terms of fintech and its impact on the various financial services that we know. Moving ahead, I'll just play a small video. Naveen sir, you can just confirm to me whether the sound would be available. So just let me play this. Just give me a moment. I'm just unsharing this slide and I'm sharing one small video. So I hope the screen is visible.
Yes, sir. It is visible.
Okay, and I'm also playing. If the sound is not there, then please do tell me. Normally,
if you've ever paid for something with your phone,
Yeah,
transferred money using an app, or checked your bank statement online, then you're already part of a multi-billion-dollar industry. It's called FinTech, and it's changing economies around the world. FinTech is short for financial technology. Seems simple, right? Well, the term FinTech includes a huge range of products, technologies, and business models that are changing the financial services industry. It refers to everything from cashless payments to crowdfunding platforms to robo-advisors to virtual currencies. So every time you donate to someone's Kickstarter campaign, that's FinTech. Or if you transfer money to someone using Venmo, that's also FinTech. And that's just the beginning. Here at a major FinTech conference in Amsterdam, hundreds of companies are trying to disrupt the banking and finance industries by changing the way we pay and borrow money. And investors are buying it. Global investment in the FinTech sector has added up to nearly $100 billion since 2010. In 2017 alone, FinTech investment surged 18%. Startups focusing on payment and lending technologies received the majority of those funds. It's not just startups that are getting into FinTech. Some of the world's biggest companies, from Apple to Alibaba, are going big on it too. Just think of Apple Pay or Alipay. One reason for all of this investment, consumers are adopting FinTech fast. 1 out of every 3 people across 20 major economies report using at least 2 FinTech services in the last 6 months. China and India are leading the way, with more than half of consumers using services like money transfers, financial planning, borrowing, and insurance. Financial technology has filled a void for people around the world who don't have access to traditional banking services. In fact, it's estimated nearly 2 billion people worldwide are without bank accounts. Now, thanks to FinTech, all you need is your phone to take out a loan or insurance. Take Kenya, which pioneered a mobile banking system called M-Pesa. Kenyans access their M-Pesa accounts directly on their mobile phones to transfer money, pay bills, or take out loans. Today, an estimated 96% of households in Kenya use M-Pesa. And one study found it has helped lift roughly 2% of Kenyan households out of extreme poverty. The rise of fintech has forced traditional lenders, insurers, and asset managers to embrace new digital technologies. For example, wealth managers now have to compete with robo-advisors, which are automated financial planning services. I mean, talk about rise of the robots, right? Thanks to high-tech algorithms, these services are available 24/7 and can be more affordable than traditional asset managers. That helps explain why some robo-advisors already have billions of dollars under management. Like any growing industry, fintech isn't without risks, and some regulators have struggled to keep up with the fast pace of innovation. Think of peer-to-peer lending platforms, where individuals borrow and lend without going through a bank. Compared to traditional banks, these services might not be required to set aside as much money in case customers default on their loans. This can be risky for companies and consumers. Data privacy is another major concern. As more financial services go digital, cyber attacks become a bigger risk. The challenges facing financial technology are likely to grow as more businesses go digital. But for many of the companies and consumers here, fintech is more than a buzzword. It's a big business opportunity.
Fine. So that was a video presentation on fintech. Now let me go back to my PPT. I'm just sharing my PPT. So Naveen sir, can you just see my PPT?
Yes, sir.
Okay. So that was a small introductory video. Let's move ahead. Now this is what represents the fintech and scenario in 2020 across the world. Just a moment, please. Yeah. So as you can see, this gives you an idea about the top fintech companies in 2020. This is given by CBI Insights, and you can just Google the CBI Insights. A lot of information on fintech companies is available on its portal. If you can see, like fintech companies have made their presence everywhere. You have accounting and finance area, capital market, credit scoring, POS, regulatory, real estate. You speak of any area in finance and everywhere you are able to find the fintech companies, right? So talking in terms of asset management, insurance, payment processing. So this is something which is really revolutionizing how the world is doing financing, how the world is dealing with the financial services. Now, why we are moving towards fintech? The question is there. Any of the participants can tell me the reason why we are moving towards fintech? Yeah, anybody would like to answer this? The question is why we are moving towards fintech?
Because technological innovations are there and lot amount of data is now available, which we can use for use with the help of technology. We can analyze various scenarios in financial sector.
Okay, so that leads us to something what is called as data science, right? And it is basically analyzing the huge amount of data that is being generated, for which we have data science to address it. So my question was, why we are moving more into fintech. So if you look at this kind of scenario, finance has been always tech friendly since the starting. If you go back, we started those credit cards, and then we started with ATMs, and then we moved on to internet banking. I believe finance have always been at the forefront of adopting these kind of changes which happen around the world in terms of the financial technologies particularly. Now, there is one study that was done, and I hope the slide is visible to you. There is something called as Edelman Trust Barometer, and the Edelman Trust Barometer, again, it gives the people's trust in different kind of services around the world. And this is particularly the barometer for India. This study was done last year, 2021. And what they did, what they found out, in fact, was this ranking. Now, in this ranking, actually, you have to read it from from the right to the left. You don't have to go from left to right, but you have to read it from the right to left. So this is basically showing in terms of the percentage trust in each sector. So you understand that the highest percentage would mean the highest level of trust. So as you can see, 87% trust is there in technology, 86% is there in automotive industry, 85% in telecommunication industry, and so on. And this graph goes down. And when you come to the leftmost item, the social media, of course, we all understand social media full of fake news and full of, fake things. Even today, there was that fake video about Amitabh Bachchan being no more. So such kind of fake things are there. So people have the least, trust in social media. But then very surprisingly, you find that the second last item here is financial services. That means the people have the least possible trust in financial services industry as such. So if that is so, why it is so? Because again, we know that there are a lot of people out there who are there to cheat people. There are scams in cryptocurrencies, there are scams in stock market, there are scams in even lending, borrowing happening around us. So people have the least kind of trust in this. Now, when you have this kind of scenario where you have least trust in financial services, and on the other hand, the extreme end of the spectrum tells you that people have the highest kind of trust in technology and its application, then you understand where does financial technology comes in. It just comes galloping in because of the trust deficit in the services, but then the highest level of trust in technology. So therefore you have people who are blindly trusting this technology, apps, and moving into that. Well, that is what is the finding of Edelman Trust Barometer says. I may be wrong. It could be you may have a different perception towards it, but that is what this tells us. So the question therefore arises that why fintech is therefore more relevant when we are facing crisis kind of situations. So there are some points which are mentioned here. Say it provides us digital solutions, right? And wherever we face kind of problems, particularly these fintech, these apps, they are very, very useful for meeting this kind of scenarios. Uh, Ability to rebrand businesses, providing flexible services, any point of time you can deal into fintech. I remember the times during 2017 when cryptos were on a very big high, and it was the first time that we experienced a situation where you could be following the prices of cryptos 24/7. Stock markets, see, we have been doing trading in stock markets, but then the stock markets get over from Monday to Friday, and by Friday 3:30, after that you are not going to look at the stock prices. Of course you may plan something by the weekend, but then we are not going to look at it. But then when cryptos came in, we had access to trading in cryptos. We were doing it on a 24/7 basis. So that is the kind of reach what has happened in terms of the fintech into our lives. Okay. So coming more nearer to us, coming to India, and how come India has evolved in terms of the fintech companies. So what you find here that there are leaders in fintech. Of course, US has been the leader. Out of those 250 companies, fintech companies which you found, which are the top companies, most of them are based in US only. And while we talk about fintech companies in India, if you go into the background of these fintech companies, most of the money is coming from Western countries only, right? So there, most of the funding is from the Western countries. Some, of course, are homegrown. They have developed, in India, and their businesses have really boomed. Like you have Zomato, Swiggy on the food side, or you got Paytm, PhonePe on the payment side. So if you look at this graph, what this tells you that US is the leader in terms, and this is a database from 2019. US is leader with 10,000 plus companies, UK 5,000 plus companies, China 2,500, And then in this particular graph, you find that India is the fourth leader in terms of 2100 companies. This is how the graph tells you over the 5 years period, last 5 years period, that India has seen an explosive growth. And there was again a news article that I was going through recently, which said that if India has even surpassed China in terms of the unicorn creation, in terms of the fintech companies creation, as such. Though there is a disclaimer here that the analysis does not include China, but a very recent article talked about how we have even surpassed China in terms of the fintech companies. This graph gives you a bit idea about the concentration of fintech companies in India. So you have Delhi, Noida, Gurugram, the NCR region having around 413 some fintechs. I think this is again 1 or 2 years old data. Uh, of course, the leader in all this is the South zone, Bangalore, Hyderabad, Chennai, amongst the top in terms of the fintech companies. Particularly Bangalore being the IT capital of India, so-called IT capital of India, has got a startup culture. If you move in city, everywhere people are talking in terms of the startups, entrepreneurs are out there, and every second person I talk to is having that thought of becoming an entrepreneur. Though, I had stayed in Gujarat, and Gujarat itself is famous for so much entrepreneurship. And we had seen, Adani, Ambani, these very big entrepreneurs now, the richest people in India. So Mumbai, supported by Ahmedabad, Pune, is as such at the second stage. Again, recent article, the last year was talking in terms of Delhi surpassing Bangalore, but that seesaw keeps on going on. But then I would still think that because I came to Bangalore a few years back, I still find the startup ecosystem here to be more dynamic and responsive than what I have seen in NCR or in the Western India. This fintech landscape, you can just have a look at it. Just have some water. You can have a look at it. This gives you the idea how it has evolved from 2002 onward over the last 20 years. Just have a look at it. So you find fintechs in payment zone, fintechs in for investment purpose, insurance purpose, for lending purpose, consumer P2P lendings, trade finance, etc. So it's a big, I would say, growth industry out there, and we are looking at very huge growth in fintech, which is likely to happen. Okay, one last video I'll play. This is the last one that I'm going to play for this, and this is going to talk about the top 10 fintech startups that we have in India. And very incidentally, some of the buildings and some of these startups that you see, coming to Bangalore, I have in fact visited them. I have seen them here. So very interestingly, some are of course led from Delhi, some are led from Bangalore. So let me once again just unshare this slide and share that second video with that. So I've just unshared the slide, and let me take you to my second video. So just a moment, please. Naveen sir, can you just confirm the sound and the visual?
Yes. It
okay,
is coming.
Fine.
According to the Global FinTech Adoption Index of 2019, India and China are both tied for the highest FinTech adoption rate in the world at 87%. This extremely high adoption rate can largely be attributed to the rise in popularity of digital payments. So back in 2016, the Indian government actually kickstarted the growth of the digital payment space when they demonetized 500 rupee notes as well as 1000 rupee notes, which pushed a lot of people towards going cashless. Demonetization was like rocket fuel for India's fintech space. And so over the years, besides digital payments, we've also seen the rise of instant access to loans, online insurance, personal finance management, as well as plenty of investment tools and apps. The adoption of fintech here in India has been so high that more than a fifth of all investments in 2019 were into fintech startups at $3.2 billion out of $14.5 billion, which is the total amount of money that was raised by the startup ecosystem back in 2019. Welcome to Backstage with Millionaires. I'm Caleb, your host, and today we're going to be talking about the top 10 fintech startups that are digitalizing India's economy. So starting off the list at number 10, we have Zerodha. So if you're at all interested in investments, mutual funds, the stock market, then you've probably already heard of these guys. The company was founded in Bangalore back in 2010 by two brothers, Nitin Kamath and Nikhil Kamath. And their goal was pretty simple. They wanted to make an online brokerage platform that was affordable and easy to use. Some of the ways that they managed to do this were by making the onboarding process completely online and also making equity investments completely free while keeping intraday trading fees as low as 20 rupees. Now, unlike a lot of fintech companies here in India that have raised millions of dollars from VC firms, Zerodha has not raised a single penny. They are completely bootstrapped by Nitin. Now, Nitin was actually a successful trader before he decided to become an entrepreneur. So he was pretty well versed in the challenges that were being faced by those who are part of India's online brokerage industry. And so while entrepreneurship is always a big risk, it's pretty clear that Nitin believed as much in his startup then as he does now. Today, with more than 1.5 million clients using their platform to place millions of orders every single day, Zerodha is among the biggest brokers in India. Besides that, Zerodha is also one of the few Indian fintech startups that's actually profitable. And they're also supporting the fintech ecosystem by providing incubation and funding to startups through Rainmatter Capital. Next up at number 9, we have Razorpay. Razorpay was founded by Harshil Mathur and Shashank Kumar in 2014. While it started as a payment gateway for small businesses and startups, Razorpay has now grown to provide end-to-end digital payment solutions in order to simplify the digital payment journey of their customers. Realizing that they were both bored of their high-paying jobs, both Harshil and Shashank quit in order to start Razorpay from Harshil's parents' house in Jaipur. Their first big break came when they were selected as the second India-focused startup to be chosen for Y Combinator in early 2015. Following this, Razorpay managed to grow their customer base from 500 to 40,000 within the first year, all while staying laser-focused on their product. Today, Razorpay has over 200,000 customers, including major companies like Swiggy, Zomato, Zoomcar, CureFit, SpiceJet, BMW, and Pizza Hut. And a large part of this growth and success can be attributed to the support that they've received from their investors, who have invested more than $125 million into the company over the years. Some of these investors include Tiger Global, Sequoia Capital, Ribbit Capital, and Matrix Partners India. Coming in at number 8, we have digital lending startup Capital Float, which was founded by Gaurav Hinduja and Shashank Rishyasringa in 2013. Capital Float partners with banks and NBFCs to offer easy access to working capital for small and medium-sized enterprises. India has over 30 million small and medium-sized enterprises, and since a lot of them don't have collateral to offer, they fail to secure funds from formal channels like banks and VC firms. That's where Capital Float comes in. Not only do they offer loans to their customers without any collateral, but they do so in a time span of 3 days or less, so that these SMEs can work on their business without worrying about securing credit. To date, Capital Float has managed to disperse more than $1 billion in loans to over 47,000 customers. What's more, they've managed to raise nearly $145 million from prominent investors like Saif Partners, Amazon, Sequoia Capital, and Ribbit Capital. Next up at number 7 on our list is AICTE. Founded by Varun Dua in 2017, AICTE is a digital platform that offers its customers a number of different insurance products, including vehicle insurance, smartphone insurance, and travel insurance. And this is actually Varun Dua's second venture in the insurtech space after co-founding CoverFox back in 2013. The startup was founded with the goal of providing Indians with insurance products at low prices. Over the course of the last 3 years, AICTE has partnered with over 20 digital partners like Ola, Zomato, Amazon, and Redbus in order to insure more than 45 million customers. They've also managed to raise $143 million from investors like Flipkart's Binny Bansal, Saif Partners, Accel, and Amazon. Coming in at number 6, we have Cred, which is a platform that offers exclusive rewards, experiences, and upgrades to its users for timely payment of their credit card bills. Cred was founded in 2018 by a serial entrepreneur named Kunal Shah, who also founded financial services digital marketplace FreeCharge back in 2010. Now, Kunal is known for running extensive polls on his Twitter and LinkedIn accounts, and so he put a lot of research into Cred before deciding to found the company. Unlike other entrepreneurs who believe in trying out an idea and then pivoting, he believes in extensive research before moving forward with an idea. The success of his strategy is definitely evident from the fact that merely 2 years after launch, Cred has been able to secure $175 million from large venture capital investors like Tiger Global, Sequoia Capital, Ribbit Capital, and Green Oaks Capital. Moving on to number 5, we have LendingCart, which was founded by Harshvardhan Lunia and Mukul Sachan in 2014. LendingCart fulfills the need of working capital that a lot of micro, small, and medium-sized enterprises here in India have by providing unsecured loans within 3 days through their online lending platform. Since most of the micro, small, and medium-sized enterprises that LendingCart works with are run by small-scale entrepreneurs working in Tier 2 and Tier 3 cities, their platform is available in 5 regional languages apart from English, in order to ease the documentation process for these regional entrepreneurs. So far, this fintech startup has dispersed loans to over 73,000 businesses across more than 1,300 cities in India. Also, LendingCart has successfully raised $200 million from the likes of Sistema Asia Capital, India Quotient, the State Bank of India, and Bertelsmann India Investments. Coming in at number 4, we have India's first unicorn of 2020 and a company that we recently mentioned in a startup news video. You can go check that out up here. It's Pine Labs. Even though Pine Labs was founded by Rajul Garg and Tarun Upadhyay back in 1998, it took the startup 22 years to become a unicorn. It started off as a platform for card-based payments and loyalty programs, but pivoted in 2012 to become a full-stack merchant platform by offering POS payments, loyalty and gifting programs, and analytics tools to its customers. And the company has had an interesting journey considering the fact that both of the founders quit the company back in 2004, leaving Pine Labs in shambles. During this difficult time, Lokveer Kapoor, who had worked with the founding team closely, took over as CEO and led Pine Labs. Today, Pine Labs is among the leading players in the POS market with a 10% market share. The company processes payments worth $30 billion every single year through its network of 140,000 merchants across 3,700 cities in India, Southeast Asia, and the Middle East. Coming in at number 3, we have India's largest online insurance aggregator, PolicyBazaar. PolicyBazaar was founded in Gurgaon in 2008 by Yashish Dahiya, Alok Bansal, and Avanish Nirjar. Even before 2008 though, the idea for PolicyBazaar was first formed in Yashish's mind as a result of some personal experiences that he had had. While going through his father's finances from 2003 to 2008, he noticed that his father had invested 20 lakh rupees in policies, and he had paid 6 lakh as commissions without realizing it. After confronting the agent who had sold his father the policy, he realized that this kind of insurance mis-selling was common in India where people are less aware about the insurance market. So he and his co-founders decided to start PolicyBazaar as a way to enable customers to compare and buy policies without needing policy agents. Today, PolicyBazaar sells 400,000 policies every single month, while growing at a rate of 100% year-on-year since the inception of the company. Of course, this kind of growth probably wouldn't have been possible without the help of PolicyBazaar's investors, who have injected almost $500 million into the company over the years. These investors include SoftBank, Tencent Holdings, InfoEdge, Tiger Global, and Chirate Ventures. Next up at number 2, we have PhonePe. Founded by former Flipkart employees Samir Nigam and Rahul Chari in 2015, PhonePe offers a number of different mobile payment solutions, including bill payment, mobile recharge, shopping, and UPI-based money transfer. In April of 2016, PhonePe was acquired by Flipkart, which brought the co-founders back into the Flipkart family. This acquisition gave PhonePe access to huge funds, enabling it to grow rapidly. In fact, Flipkart has already invested 40 billion rupees into the digital payments platform. 4 months after being acquired by Flipkart, PhonePe became the first payment app to launch UPI-based payments in partnership with Yes Bank. Today, more than 5 million merchants are using PhonePe to accept payments, and the app crossed 5 billion transactions in December of 2019. Now, like I mentioned at the beginning of the video, demonetization has also been a key contributor to the growth of PhonePe, especially in Tier 2 and Tier 3 cities. And this growth has further been accelerated by the fact that PhonePe offers its platform in 11 different regional languages. Today, PhonePe is one of the top 3 digital payments apps in India, along with Google Pay and Paytm. And speaking of Paytm, let's move on to number 1 in our list of the top 10 fintech startups in India. Started by Vijay Shekhar Sharma in 2010, Paytm is now dominating the fintech space in India, and it's actually the country's most valuable unicorn. They have over 350 million users on their platform, and they've forayed into new markets like wealth management through Paytm Money, e-commerce through Paytm Mall, and online gaming through Paytm First Games. Growing at a tremendous pace, Paytm is also looking to go public by 2020. The company's investors, which include SoftBank, Ant Financial, T. Rowe Price, and Alibaba, are thrilled with Paytm, and they've invested a massive $4.4 billion into the company over the years. While Paytm does compete with other players like Google Pay and PhonePe, it is way ahead of its competition, and the huge amount of financial support that it has received is likely to further establish its position as a market leader. All right, guys, there you have it. Those are our picks for the top 10 fintech companies that are digitizing India's economy. I hope you enjoyed.
So guys, that's about the top 10 fintech companies. I'll just go back to my PPT now. Yeah. So Naveen sir, can you just confirm I'm back to my PPT now?
Yes, sir.
Okay. So let's now come to our agenda item, and my agenda item is talking about the financial disruptions. Now, we understand that the old ecosystem of banks, financial institutions, insurance companies, the stockbroking companies, all these old infrastructure which still exist today is being challenged by these fintech companies. If you look at the term fintech, disruptor, so these fintech disruptors can be defined as fast-moving companies, particularly these fintech startups, which are focusing on a particular technology, which of course acts as a kind of a bridge between the customer and these old financial institutions. And what they are focusing on is something which is very profitable, where the old the brick and mortar financial services institution has been lazy in terms of filling in the gap, or maybe in terms of offering their services efficiently, so they move into that. And particularly if you look at most of these fintech disruptor companies, they are basically based on mobiles. So you have an app which will enable a kind of a service, and that will actually be more efficient, be cheaper, and will be more beneficial to the customer. So that is what has been happening. If you look at that, they have been attacking some of the most profitable elements of the financial services, where these brick mortar companies have been lacking in. And if you look at in terms of the damage that has been done, so particularly the coming in of all these new payment banks, the new banks that we call them, or these payment services, they had really challenged the old established system. If you look at banking particularly, these banks are needing now to respond to that. If you look at ICICI Bank introduced that Pockets wallet. If you look at State Bank of India still to come up with a wallet. They have that YONO service, which is their YONO app, which is there. So they are responding. They are coming in with their services, but then they have been slow to respond to that, and that's why you have Paytm at the top, followed by PhonePe, followed by Google Pay. These have really challenged these brick mortar services. Now, there was one report given by the World Economic Forum. World Economic Forum holds its meetings every year. Particularly, you hear about the meetings happening in Davos, and they had released a report on the disruption that is being caused by these fintech startups to the existing brick mortar financial services companies. And this actually gave a very in-depth insight into what is happening around us, and what kind of scenarios we are looking at. So the second part of my presentation, I have completed with the introductory fintech part. Hopefully there was something extra for you, what you might not have seen in the earlier presentations or earlier sessions. So moving on to my second part, now I'm going to focus my presentation on the this particular report by the World Economic Forum, where we'll be looking at what kind of challenges are now emerging in the fintech scenario. So if you look at this particular chart, basically what the World Economic Forum is saying, that there are some 11 clusters of disruptive innovations, of course led by the fintech companies, which are exerting pressure on 6 core functions that we find in the financial services. Which are these 6 core functions? You can see the graph also, and you can see on the sidelines also it is mentioned. So you have the payment services, you have the insurance, you have the market provisioning, which is basically the market, stock markets and all that. You have the deposit and lending businesses, you have the investment management, and you have the capital raising. And what is causing challenge to these are again highlighted within that. If you look at this pie chart kind of diagram, all the 6 core functions of financial services are highlighted there, and within that you have a different kind of challenge which is happening. So say for example, if you look at the payment side, what you find there, it is talking in terms of either the cashless world, moving towards a cashless world, or talking in terms of the emerging payments. If you look at the insurance, talking in terms of the insurance disaggregation or the connected insurance part. Coming to deposit lending, talking about alternative lending, shifting customer preferences. In fact, we will go into detail of each one of these in my coming slides. If you look at the market provisioning, it is talking in terms of smarter, faster machines, new market platforms, talking in terms of the investment management, empowered investment, process actualization, capital raising, particularly it's talking in terms of the crowdfunding. So there are so many, disruptive innovations in the fintech arena, which are really challenging our existing brick and mortar system of the financial services. So this actually gives us a snapshot view of what is happening out there. So let's now move deeper into these and try to, go through each one of them, what is happening. This is a summary of the report which was given by the World Economic Forum, and these were stated as the key research findings by that. So just let's have a look at this before going into each of the kind of the disruptions what are happening. So what they found, and let me now read through this. So the first point mentioned that the innovation in financial services is deliberate and predictable. Incumbent players are most likely to be attacked where greatest sources of customer friction meets the largest profit pools. So the fintech companies need to survive also, and for that, and also to give their services, they are targeting those particular points where the older traditional financial services companies are lacking, or they have not built that bridge, and these fintech companies are building the bridge. One point let me tell here, though I am talking in terms of the challenges and the issues that are facing these old traditional companies with the coming in of the fintech disruptor companies. Still, one thing can never be denied, that these fintech companies can also only survive with the support of these traditional brick and mortar companies. Say for example, take the case of Policy Bazaar. A Policy Bazaar is one of the largest aggregator of the insurance companies in India. So you go to Policy Bazaar, you find out which policy is more suitable to you. You can do a comparison of all the policies, and you can select which is more cheaper and beneficial from the individual viewpoint. But then how this policies will be fructified. So ultimately at the back end, there are these insurance companies which are there, and they are offering their services, and Policy Bazaar is just acting as an aggregator. If you look at again Bank Bazaar or the other kind of companies, what they are doing, they are again aggregating the things. If I go to the Google Pay, say for example, Google Pay is linking your bank's accounts, and you are paying through that. If I look at PhonePe, or if I look at Paytm, of course they have an additional wallet in addition to the linkages with the bank accounts that we can have. But then ultimately, you'll find it more beneficial to transfer money to the wallet and then pay through the wallet, which happens, I believe, much faster than going to pay through your bank account, which would again ask for a PIN in addition to the normal entry into the app. So anyway, looking at the convenience aspect, also looking at the efficiency aspect, also this is again something which is being challenged, but then not without the support of these traditional brick mortar companies. Second point talks about in terms of the innovation having the greatest impact, where they employ business models that are platform based, data intensive, and capital light. So particularly you find that these companies do lot of analytics. They, what we call as the big data. They do the analysis of the big data. They derive what are the preferences of the customers. They derive what way the customer thinks, what the customer is going to look at. They predict the things, right? Of course, you would have the experience when you shop on Amazon. Amazon directly throws up that you might be interested in this, you might be interested in that. All that is because of the back end, analytics which is happening, what we term as big data or AI happening there, and coming up with that nugget of information that you might be interested in that. And that's how these apps or these portals throw up these kind of services. Okay, then this is talking in terms of disruption being felt in banking sector, but then yeah, the research said that the most likely disruption will be felt in the insurance sector, but then we have to still realize that. Further, it talks in terms of the institutions employing parallel strategies, competing with new entrants, and leveraging legacy assets. So one thing is sure that these traditional companies like your ICC bank or maybe the mutual funds or the insurance companies, they are facing the threat from these fintech startups. But then we are also seeing that collaboration happening. So while they are supporting the government initiative, you would be aware that Reserve Bank of India has established a fintech department which is looking into this. The government of India is also very much after fintech, and we have fintech as a strategy now in corporates also. So while it is there, everybody realizes the benefit of it, everybody encourages the setting up of the fintechs. They also are evolving their own strategies. I told you about ICICI bank launching the pockets app, right? And similarly others are also now moving into this kind of arena to just give a kind of a challenge back to these fintech companies. Collaboration between regulators, collaboration between incumbents, new entrants is required. Of course, we don't want to discourage any kind of industry. And further, it is talking in terms of disruption not being a one-time event, but then being a continuous, kind of event which is continuously happening, will bring in more and more innovation, and we will see more evolution of the financial services industry. So these were, the research findings which were there from this World Economic Forum report. And let's move on to, in each area what is happening. Now this is related to the payments vertical. As you can see, we were talking in terms of the total 6 verticals out there. Particularly in terms of the payment vertical, it is talking in terms of the cashless world, the emerging payment rails. Now these are the disruptive trends which are now highlighted here. You can have a look at them. So if you look at a cashless world, disruptive trends highlighted are the mobile payments, right? I don't recall a time when I bring out my wallet and bring out my cash to pay. It's become very very rare, in fact, right? And even the use of the cards, we carry so many debit cards, credit cards. Even the use of them has also become very very rare, because wherever I go, I can just tap my phone, I can just open the the Paytm app or the Phone Pay app or the Google Pay app, and I can do the payment. And Amazon is also not far behind. It is having its Amazon Pay, which is trying to lure us into working that by so many incentives also. So you have all these apps which are enabling these payments, right? And it has only grown over time, right? Of course, we know that the technology behind that, and I hope I'm not covering that part, but I hope that most of you would be aware of the UPI system, right? And I do hope that some resource person would also talk about UPI, how UPI has really revolutionized the system in India, the payment system in India. It is the largest payment transaction system in the whole world, in fact, right? And the payments that are happening on the UPI interface is really, really great. In fact, there is another word I would like to use here, and of course, you people can look up that, and that is called as the India stack. And I hope again that some other resource person would have touched upon that, or if not, then you can always look it up. That India stack is what is enabling all these technologies, all these systems into India, right? So you have UPI, you have Aadhaar based system, so you have NCPI at the back end. It is all something which is really revolutionary in India. Then it's talking in terms of the streamlined payments, integrated billing, next generation security systems, and particularly what we are finding are that newer and newer functionalities are being built in the system, and that are changing the way and how we behave. The other day, I was just touching upon the Paytm Mall, which is now built into the Paytm app. And then you have some other aspects like, KYC. If you clear the KYC, then you can even further go and create a business kind of Paytm app. There you can be, even you can receive the payment as a business. So there's so many possibilities which are now being explored, which are now being expanded into these systems. In terms of other payment systems, if you look at it, disruptive trends, then we talk in terms of the cryptographic protocols, right? Of course, cryptographic protocols or encryption, particularly if I talk about the computer science people, encryption has always been there. But now you have the cryptographic protocols which are coming in, and these have a great application. Particularly, I'm talking about the cryptocurrencies, which has emerged as the transaction medium. In fact, you must be reading that Russia is, in fact, planning to go in for changing over the system. They are incorporating more and more, like peer kind of dealing. So today's newspaper talked about Russia trying to encourage Indian exporters to go in for rupee ruble system directly, rupee to ruble currency system. They have shifted their credit card, debit card from the US dollar to the Chinese yuan system. Um, and particularly the role of cryptocurrencies like Bitcoin, Ethereum, Ripple, the Binance, all these are now, they are under challenge. In fact, we have been seeing the cryptos prices going up. Bitcoin, the last I saw was somewhere around 42,000, 43,000. In fact, these are the most volatile markets in the world, as you are well aware. One of the biggest potential of cryptos is its usability in transferring of funds. Particularly, I remember one experiment that was being done by Axis Bank. They were, using Ripple. In short, the symbol of Ripple is XRP. So they were using that Ripple for the transfer of funds from one country to another country. Particularly, why they found it more beneficial was the economic part to it. The cost of transferring funds using cryptocurrencies like Ripple is very low as compared to the cost of transferring funds using your normal transfer channels like MT or TT. Say for example, you use Western Money Union for transferring of dollars from US to India. That may cost you up to say $60 for transfer fees. On the other hand, if you use Ripple for the transfer, it would be very simply could be down to $2 or $4. And the other beneficial aspect is that the transfer will happen immediately. and it would be very fast as compared to the transfer, which may take at least 2 to 3 days in other cases. So these are the potential for the the use of cryptocurrencies for the transfer purpose, and yeah, we look forward to that and see how this kind of system evolves. Another aspect is P2P transfer. P stands for, of course, peer. So peer-to-peer transfer is something that what we are seeing nowadays, right? So at the at the individual level also we transfer funds. The other day we had a small get together in our area. Particularly I belong to finance area. We got some 16 faculty members out here. So in our area we had that get together, and the person who organized, we simply transferred money to him through Paytm. So that is what we are talking in terms of the peer-to-peer transfer at a very individual level, which again goes up to the business level also. Mobile money. You would have heard about CBDC emerging as one of the challenges which Reserve Bank of India has taken on itself to launch the e-rupee. Your finance minister talked about that. The other day I was just exploring, which countries have launched or are in the process of launching, and I came across Hong Kong launching the Hong Kong dollar, and in fact they are far ahead of us in terms of the final, launching of that CBDC, what we call as a central bank digital currency. So this change is also going to be quite challenging. In fact, everybody is just speculating. In fact, how this kind of thing will be enabled, how we will be able to, store e-rupee, or how we'll be able to transfer e-rupee, and those modalities are being, they are being framed. Okay, moving ahead from payments, we now move on to the insurance side. If you look at it, it is talking in terms of the disaggregated distribution at the individual level, talking in terms of the sharing economy, self-driving cars, which I believe can again pose a big challenge in terms of the insurance. It was very funny, funny advertisements which come that there is a accident or there is some problem. The traffic policeman comes and he finds nobody is driving the car. The person is sitting at the back, and he's looking at his mobile. The traffic policeman tells him that you have a penalty. He said, I am not driving the car. The car is being self-driven. So such kind of situations, and imagine if there is, God forbid, any kind of accident, how insurance will deal with that, right? How insurance will be taken into consideration when there is nobody driving the car and it's the technology which is actually driving the car. Who is going to be the party, right? Who is going to be responsible? Okay, then we talk in terms of, say, connected insurance, like sensors are there, wearables are there, Internet of Things linking, all kind of gadgets, all kind of, in fact, we have smarter homes also. So with just a mobile, you can control your homes. These kind of things are going to be very challenging for insurance companies. In fact, they are right now, of course, they are being challenged by the aggregation in their insurance products. I gave example of Policy Bazaar. So they are facing that kind of challenges, and further with the emergence of newer and newer technologies, pinpointing and saying that, okay, you are responsible for this is always going to be very difficult. From this, moving to deposits and lending, the third vertical that we are going to talk about out of the 6 verticals. So if you look at deposit and lending, there again this alternative lending has really taken a hold. Just to remind you about those Chinese apps, the big scam that has happened in relation to the Chinese app, where they have lended money to individuals and then they have resorted to very dubious means, and I would say illegal means to get that money back. It was, of course, quite highlighted few months back when few people committed suicide because of this kind of situation, where their phone numbers, their contacts were out in the internet, and those people were called and told that that person is having payment dues, and that led to some very sensitive people ending their lives because of that. So such kind of peer-to-peer lending is now in vogue and has taken over the systems. In fact, there's an advertisement which is right now, you must be aware, is coming in TV and online portals about that Mishu, right? Meeso, I believe. I am hoping I get the spelling correctly. So there's a person who is facing problem in purchasing something because there are other dues, other family expenses which are there, and then that app comes in. You can borrow 50,000 rupees, right? Just on the app. So such kind of things, which is peer-to-peer lending, is making inroads into our system. Just to add here, we have a lot of cryptocurrency apps also, as you are aware, DCX, CoinKuber, and all these kind of things. But the question is how much we trust in them, because again you have a dissonance because the finance minister says, or the treasury secretary says, or the revenue secretary says that okay, we don't recognize these things, we are not going to commit whether it is legal or illegal to trade in cryptocurrencies. And that over like 13-14,000 crore of Indian rupee investment by individuals has been made into cryptocurrencies. So such kind of situation, you really don't know what is the trust part, whether we can trust in these apps or not. But then you have full page ad of CoinKuber or these systems, right? Yeah, lean automated system processes. Of course, these systems even give you loans without any kind of background processing. I have seen some systems where they ask for the PAN card or the Aadhaar card, but then how far it is going to be useful, that is to be seen. Excuse me. In terms of banking, if you look at it, it is talking in terms of disruptive trends like virtual banking is there. We can have the banking as a platform. Of course, internet banking is there, mobile banking is there. So these have created a kind of a disruption. Banks have to come online. Banks have to offer their apps for dealing into this. I believe, I'm a big user of mobile apps, and one folder I have made where, whichever bank accounts I am having, I have access to these bank accounts through the mobile apps which are there for each of the bank. So every bank is now, they have to offer these apps. They have to meet the challenges which has been thrown by the fintech companies. They have to make the presence there in form of a banking app for that particular bank. I remember, ICICI Bank was the first of the block. SDFC Bank was again first of the block. But then the public sector banks have been quite lazy and late coming in with their apps. But now you find that, right? In fact, SBI's YONO app has become very, very useful, and in fact, it has become very fast. So yeah, that's how Indian banking is changing. I hope you will have some more inputs tomorrow's first session on that. Coming to the capital raising part, now this is very interesting thing that we have here. Crowdfunding has become one of the major ways of raising funds, right? So one thing is, of course, there that most of these crowdfunding apps or the portals, they have actually acted as a kind of donation based funding. In fact, one of the well-known examples which is cited is how our next door country, Pakistan's prime minister, built a cancer hospital in the memory of his mother by way of crowdfunding. How one dam there was funded by way of crowdfunding. And we also come across so many advertisements, so many people saying that we need money and please fund us. I remember one of the visiting professors in our university who used to come from Chennai to Bangalore. Uh, his wife was detected with cancer, and he sent me a link, and that link was where he has posted the details, the full MRI, and the reports of his wife, and mentioned that he needed money because that the whatever medicines were required, whatever treatment was required, was quite costly, and he needed funding, and he was a retired person from bank, in fact. So that is how we find, there are people who are looking at donations. There are people who are looking at funding something or the other. So all this has now been enabled and is within our reach through these, apps, through the social media as such. Just the other day, I was looking at the Times of India app, which I have on my mobile, and there was Sonu Sood who was talking about funding for a small child. So you have these kind of things, and crowdfunding is again becoming one of the disruptors in the funding scenario that we have in India, right? So that is about the capital raising part. Coming to the investment management, the fifth one, I believe. So you have the disruptive trends. If you look at it in terms of social trading, you have the automated advice and the wealth management system. Particularly, there was this talk of the robo advisors. uh, so basically robo advisory services, which actually are, bots, if I would say like that. They respond to your queries. They have their inbuilt menus. Like I think Bank of Baroda was amongst the first one to launch this robo advisor. So you have them there. They just act like, human beings, and voice is also, which is fed in, is of a human, and they will then advise you to, how to go about maybe filing a loan application form, or maybe applying for a account, something like that, right? And these advisory services are becoming more sophisticated over time. So as you can see that they are now also being used for the purpose.
Sir, you are on mute. I think it by mistake you have muted yourself.
Okay, 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 okay. Now you can hear me?
Yes, sir. Yes, sir. I can hear you.
Okay, and Naveen, can you tell me like for how long I have been mute?
Sir, it's just 2 minutes. Yes.
Okay, 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 okay. Not an issue. Not an issue.
Yes.
Okay, so just coming back, actually, I was talking in terms of the robo advisory services, and so robo advisory services. Did anybody hear or not? Oh, I hope I have not put everybody on sleep as such. I know it's time towards going towards lunch, and even I have to also go for lunch. Okay, not an issue. So let me try to wind up as soon as possible now. So we are talking in terms of the robo advisory services. I'll repeat it again once again. So robo advisory services are something that are now enabling our banks to do a kind of a informal, or I would not call it inhuman, but then without human interface with their customers. So basically, what robo advisories are, that like they are already have inbuilt programming. You interact with a computerized system. It just feels like interacting with human beings. Just that they have inbuilt response system based on what the customer is going to ask. Most of the time, say for example, I have my system at home, where sometimes when the net is not working, it is simply built into the system that I press those buttons and it will immediately respond to me, and then after that it will reset the system and it will come online again. Or you remember the earlier, we used to send the SMSs or what MMIDs on the mobile phone to get our know our balance. Now that system has further processed into a kind of a decision making system, where they give us decision in terms of what would be the best in terms of your investment, best in terms of managing your wealth, and so on. Coming to the algorithmic trading, and algorithmic trading, I was just talking about what exactly do we mean by algorithmic trading. So basically it's a software system which has got inbuilt programming into it. When we make a program, we first start with the algorithm. Algorithm is followed by the flowchart, and flowchart is followed by the code of the language in which we are programming. Could be C, could be Java, could be any other language, right? So when you are making the algorithms, you are actually building in rules into that. We know that as human beings we are very emotional, we are very sensitive, and our decision making might be influenced by those kind of emotions. So for example, if I had purchased a stock, I'm very much in to that particular stock. So even though the trading signal is telling me that I should sell that stock, still I will hold on to that, because I have got an attachment to that. A robo advisory system or a algorithmic trading is emotionless, right? So it would take a decision based on pure business fundamentals, that you need to sell it, you sell it, right? So such kind of algorithmic trading is of course taking over these systems in the West. Most of the Western systems where the brokers are involved or trading is involved, they have shifted towards the algorithmic trading. In India, this trend is now catching up. You have certain systems being there where the brokerages are using the algorithmic trading. But then do remember that such kind of trading can also result in big problems. We had seen these over the last few years, where some of the broking systems, they have actually crashed. And particularly there was one system where the program actually sold off when it was supposed to purchase, and that led to a negative 20% circuit breaker in that particular stock, and it was happening on National Stock Exchange, NSC. So NSC had to come in, had to stop that particular counter, and trading was stopped there. So such kind of faulty systems can also happen. Of course, these are very rare kind of things when such kind of system happen, but that is there. When you are just going by the rule based system, your software could also do such kind of issues, can create such kind of issues. Further, if you look at the processes which are happening, so now we are moving towards advanced analytics. NLP or natural language processing is now taking over, so that whatever you speak is directly analyzed by the system. Very simple examples being at our home, you have Alexa or Siri. You just say, and that system processes what you said, and that the system at the back end is the NLP or the natural language processing, which is processing your words and is giving out the output. So such kind of systems have now taken over. The scope is really big of such kind of systems, and uh, of course this not only brings about a new level of efficiency and sophistication to the working of the financial system, but also the challenges which are there, right? And for each of my these findings, you can see that there are implications also. Because of the paucity of time, I'm not touching upon those implications, but then you can check the implications which are also there for such kind of changes or disruptions which are happening. Okay, coming to, I think this should be the last one. This is talking about the market provisioning or the different kind of markets that we have and what kind of disruptions are happening. So here what you find is the data which is being generated in the market is quite prone to machine analysis. In fact, we have been, as researchers in finance area, we have been crunching our data. We use eViews, we use Gretel, we use Tata. So there's so many, softwares that we use. But now, the softwares which have come in, what we call as, they are very much able to handle the big data. In fact, just to add here, there is something called as edge computing. I do hope that you would have heard about this. This edge computing is at the name itself tells it's at the edge of the computing, where you have the critical data, and since you have billions of bytes of data, out of that you find out what is the more important one, and you crunch that data, you do the analysis of that data. So that is what is now being targeted. We know that big data handling softwares are there, but then those would take a lot of time to crunch the data to come out with analysis. So why not to focus on the critical data within that big data and do the analysis of that and come out with the findings. So such kind of thinking is there, such kind of processing is there. You had learned about artificial intelligence, machine learning. In fact, I utilized this COVID times to learn Python, and we know that Python is quite supportive of our understanding and of our work towards AI ML kind of work. So you come across so much buzzwords: deep learning, artificial learning, machine learning, big data, and so on. So you have to understand these, because these are some things which are going to change our world, as we know. New market platforms are coming up, and these are again going to cause big disruptions, as we understand. If you look at it, of course, these are some of them are basically the US based platforms. Similarly, you're finding that within India also a number of platforms are coming up, whether you're talking in terms of the cryptocurrency platform or you're talking in terms of the stockbroking platforms. Zerodha is now the largest stockbroking platform in India, surpassed ICICI Direct, which are supposed to be the biggest one, just because you have it as one of the cheapest and the fastest stockbroking platform in India. Yeah, so those were the 6 verticals that we had talked about in terms of the disruptions that they are going to cause towards the financial services. So 6 verticals we had handled, and within those 6 verticals, some 11 core disruptive innovations that were going to change those verticals, and are, in fact, we are looking at them now. See, this report is quite a few years back report, and it was predicting that these kind of changes would come, and we are witnessing the evolution and the changes which are happening because of this. Now, something that is going to cause a further disruption, and something for which we have to be prepared of, and something which had been frightening the individuals, is what is here, right? And that is the incoming of artificial intelligence. See, when we used to think about artificial intelligence, we used to look at those movies where Transformer movies were there, or you had the Arnold's movies were there. So we just used to look at what kind of changes AI is going to make. But AI has been, you know, going to be a big challenge. People sometimes fear that AI might take over our systems in the future, and the future is going to be of robots only, and so such kind of what I would say the worst case kind of future scenarios are being built. But then one thing we should know that AI should be harnessed by individuals, harnessed by human beings. We should have the control. We should never lose the control. Now, if you look at the incoming of AI, recently now the mobiles have started being based on AI. The AI is being built into them. So how our financial institutions were going to react to that? So if you look at it, the financial institutions in the past were based on what? They were based on the scale of assets, right? You would say that, how much $1 billion a financial institution has, that would say how big the institution is. Then in terms of the mass production, huge, factory kind of scenarios where you used to have branches throughout, and you need to have presence everywhere. Again, exclusivity of relationships in terms of accessing different markets, accessing different investors, high cost impact of moving from one customer to another, moving in terms of the providers, and customer retention, of course, again, entails a lot of cost there, depending on being. Now, what AI has actually changes is in terms of now relies more on the data, the scale of the data, and how you are able to analyze that data. Again, in terms of experiences, going down to the personal experience for the individuals, who are the clients who have the exclusive relationship with your customer. Now it is basically in terms of optimizing, finding the best fit between parties, from where you can get the lowest cost goods, and everybody is everywhere. I can access this bank local bank, where you have this global reach. Then again, in terms of retention, this is something, of course, to do with HR side, but then what we are talking on here is retention of the customer. So how far we can retain the customer and keep that customer with us. And finally, in terms of the not only depending on the human part of it, but then also bringing in the AI to, of course, we are always afraid of this word replacing the individuals, particularly, in universities, since we are in teaching fraternity, we understand that teaching can be also sometimes be, we can also be replaced by, robots who are having all the information and could answer any of information of the students. Particularly, we are sometimes, in the class, if the student has asked something out of outlandish kind of question, so we would say that, let's ask Google Devta about it and let Google Devta answer that, right? So we know that, this availability of information at your fingertip is something that is very challenging to the teachers. Whatever I speak in the class, I have to be very, very careful that a student sitting at the back is not checking the information what I am telling them, and is checking on the net and saying, sir, here it is written something and what you are telling us is wrong. So that kind of situation we have to be very well aware, right? These are the challenges what we as teachers also face. Okay, fine. This is I think the final slide, which was talking about the findings from the AI coming into the play in financial services, slide, which was talking about. So just you can go through. I'll just have some findings water from the AI coming into the play in financial services, slide, which was talking about. So just you can go through. I'll just have some findings water from the AI. So this is talking about the application of AI in the financial services, how it will
just you can go through
make things different. The AI. So this is talking about the application of AI in financial services, how it will
just you can go through
make things different. This is talking about the application of AI. I was talking in terms of the RegTech there, and in fact FinTech and TechFin, you know, these are again some differences that one needs to understand. And then again in terms of the highlight, so if you look at in terms of the highlight, moving from cost center to profit center, of course customer is something that we need to grab, we need to retain, we need to look to customers, keeping their royalty. Of course customer royalty is something that's a question mark nowadays. Okay, then talking in terms of self-driving financing, collective solutions, bifurcation of market structure, uneasy data alliances, power of data regulation, balanced approach to talent, new ethical dilemmas. So many things are going to be different because of the coming in of AI, and I believe we have to be prepared for that. So are we done yet? Now that's a question mark. Yeah. Well, picture abhi baki hai mere doston. I'll end with this last part, which is going to now take you on a different plane altogether. So far what I have covered, so I started with FinTech. Of course I started with VUCA and VUCA 2.0. Then I went into FinTech definition, then I talked about the FinTech scenario in the world, coming down to why we are not trusting the financial services, but we have a more trust on the technology aspect. So when technology comes into financial services, we then go in for that, right? Then we talked about the FinTech scenario around the world. We talked about FinTech scenario in India. We had seen a small video on FinTech. We have seen a small video on the top 10 FinTech startups in India. We moved on to the World Economic Forum report, and we talked about the different kind of disruptive innovations that are going to happen, and in fact they are happening as we are speaking, over the 6 core areas, and the newer and newer technologies, newer things which are coming in. So with coming in of that, we are also looking at another disruption that is happening due to AI, artificial intelligence, and this is finally leading us to where. So last year, as you are aware, Facebook changed its name to Meta. Now, I don't know, many people would not have noticed that change. Because we call it as Facebook. Still, the apps are called as Facebook. It is not called as Meta. So from where this Meta word came, right? So this is metaverse, right? So Facebook company, as you are already aware, is now called as Meta, and metaverse is something where we are supposed to have our digital identity. So you, me, all are going to be there in that particular digital world as our virtual ourselves and be part of that metaverse. Now question is, where the FinTech companies will have applications in metaverse. So in fact, I'm taking you beyond what World Economic Forum report said. I'm taking you beyond what artificial intelligence role is going to be there. And now I'm taking you into something which is, I would say, right now it is evolving, right? It is much beyond even NFT. It is beyond cryptocurrencies. In fact, NFT, and I hope you people know what NFT is, which is non-fungible tokens, that is going to have a big application in this metaverse, which we are going to talk about. So, I was just looking at how, FinTech would have its application in metaverse, and, this is what I came across. So if you look at this, this is talking in terms of the future of the financial services in the metaverse, what Facebook has planned and what many companies are now shifting towards. So what we can expect from the FinTech companies and the financial services companies when we are looking at metaverse. So as you know, metaverse is what it is, hosting our digital identities. it is hosting digital transactions. So we may have those kind of things there. So if you look at it, you know of course we come up with all these through different kind of researches. So what researchers say that it could be in terms of the virtual interactions which are there, right? So just like we interact with the customer on a face-to-face basis, our insurance people, our mutual fund people, they move from place to place, they meet customers, and they wait for the customer. They spend so much time meeting their customers, convincing the customers. So it could be possible that we would be engaging with the customers in our virtual edition, right? So the customer is there in his digital avatar, and the selling person from the mutual fund or from the insurance person, he's there in his virtual avatar, and they are interacting in the metaverse. And that's how they are again convincing each other that okay, you take up this policy, or you take up this kind of investment, or you go in for such kind of transaction. So such kind of thing is quite possible. And we also know the AR or VR technology, right? Where we can have those goggles on our artificial reality, virtual reality, right? And you can then feel that something is there in the surroundings around you. So a lot of such kind of examples are emerging. Of course, I remember way back when the current, the government, Modi ji started his rallies. There used to be this his holographic form, in fact, of Modi at all the rallies. He was placed in the studio or somewhere, and his form would address all these rallies. So, we were quite enamored by this kind of technological way our leader, expressed himself by addressing so many hundreds of rallies by his holographic format. So this now we are actually going to realize, right? And the realization is going to be in form of this metaverse, which is going to happen. So the interaction, the virtual interactions, then in terms of even virtual training, quite possibly, we can, our digital avatar would be able to take, say, for example, that 100 hours, insurance training program, and would be graded accordingly in the metaverse itself. So such kind of virtual training would be quite possible again. Pilots train on those models of those cockpits, and they can again do the same thing in metaverse, and train themselves accordingly, even not going there to that actual place, and still being in their enclosures wherever they are. They can do those kind of trainings. So it is quite possible. It could be possible in terms of wealth management services, could be possible in terms of even financial criminology. We know that fraud accounting is again one very major thing which is uh, developing, and financial frauds have to be caught before they occur. So you can even train people into that. And then you can have while everybody is there in this metaverse, you can even have virtual businesses running there. And when virtual businesses are running there, they would have their own kind of requirements. So such kind of things we believe are going to happen in future with this whole metaverse buzzword which is there. In fact, my vice chancellor the other day was talking about the role of metaverse and how we can harness the metaverse for our benefit. Well, I think that is it from my side. I'm now open to any kind of questions that you may have. This is my email ID. In case you would wish to correspond with me, you are most welcome to send me mail on this. I'll be happy to respond to you. Fine, Naveen sir, that is it from my side. Now I'm open to any questions if there are.
Any question, participants, if you have to, you can ask from sir.
So I just thought let me leave them at least sometime before lunch, right? Even we are also late for lunch, but then still if any questions are there, they can be directed, or else I have already giving my email ID. They can also mail me on that. Yeah.
So I think, sir, we can conclude it if no question from participant side. So
that can happen only in two conditions, right? First condition is it went everything above their head, or they understood everything. And we know that, understanding everything is sometimes not possible. So I'll take it both 50-50.
no, I think it's quite relevant. It is like we all are mostly are belong to management background. So
Right.
majority of like the presentation are related to I think many of you can understandable about the what you have taught, because few sessions we have purely technical. So
Yeah.
sometimes management background people cannot understand that so much of technicality, but this is a mix of thing, and it is the information you have provided, that 10 big companies of India FinTech, that is perfectly fine. It is very useful to all of you. I think even for me also it is very informative.
Yeah, and understanding the changes that are happening in the fintech, what is disruption it is bringing about in our
Right.
financial services, understanding that is again very important, because we are finding this all changes happening all around us, and individually we are getting affected by this. So what is the future direction? Like the AI coming in, the metaverse coming in, it's really going to cause a big disruption. So we have to
Right.
be ready for that. We have to be ready for the future.
Right. So I think, sir, we can conclude, because it's, I think maybe all participants are gone for lunch
Yeah,
because
could be possible.
it's
In
lunch
fact, I'm
time
also missing
already.
my lunch. So we can conclude.
Yes.
If we don't have any questions, we can conclude. Sure.
Fine. Okay, so thank you, sir. Thank you very much for joining us, and for providing a very insight and fruitful information to the participants. Thank you very much, sir.
Thank you. My pleasure. Thank you.
Thank you, sir. Thank you.
Yeah. Thank you all. Thank you for being a patient audience.
Thank you, sir.
Yeah. Thank you. Thank you. Bye.
Bye, sir. So participants, we will meet again after the lunch. It's lunch time, and we will meet again at 3:15 with the topic of on NEP.